Okay, hi guys. This is Anurag here. Today, we've been speaking to Siddharth Shetty, co-creator of Finternet, and we're going to have a brief conversation on, a bunch of stuff around the Finternet, what the Finternet is, what did, Siddharth and other co-creators had in mind. So it's going to be a very free-flowing conversation. So, very, very pleased to have you with us on the podcast. So Siddharth, in general, I'll just start off with having you give a brief history of how you came to the Finternet before delving too deep into the Finternet. So some color on what was your journey before Finternet and what led you to this moment of co-creating the Finternet. We'll start from that and then we'll get a little bit more deeper.
Sure, sounds good. Thanks again, Anurag, for hosting me and looking forward to this conversation today. The journey of Finternet, I think, has been evolving in our mind over a few years. Initially, the journey started off, I would say, building very purpose-specific infrastructure. So I got to be a part of the team that had started out designing and building digital public infrastructure, which were deployed at population scale. And these were identity systems that are deployed to 1 billion people, payment systems that were used about 600 million times every day, data sharing systems that have about 2 billion accounts part of it in an interoperable manner. And so as we were constructing a lot of this infrastructure, a few things stood out. One, really the power of technology when designed the right way to democratize access and open up markets and really give that agency and control back to individuals. But what we realized was the way we were building financial infrastructure in many markets across the world was sort of like every time you build a new car, we built a new road, right? So it's very purpose specific to that use case, and you're building this entire stack that's specific to that use case. And that felt very constraining. It also took a lot of time. That's often why most financial market infrastructure takes 5 years to build out. Cross-border connections take 5 years. And imagine, 190 countries into 190 countries into 5 years is a few centuries, right? So there had to be a newer way. And that's when we started exploring a lot of the cryptographic advancements that were happening. And about 2-3 years, me and another one of my colleagues, Pramod Verma, who's been the chief architect a lot of these digital public infrastructure, and then Nanda Nilikani, we started to have a set of discussions of like what this kernel could look like. And then about 2 years back, we met with Augustin Carstens. He was formerly the central bank governor to Mexico, finance minister to Mexico, and currently the general manager of the Bank for International Settlements. And he too was thinking about a similar problem, and so that's how we started to work together, and then released the Finternet paper in Washington, D.C. last year, along with the central bank governors from Germany, Korea, and Brazil. So that's really what the background of the Finternet has been.
Okay. Makes sense. So I think we'll then quickly get down to, maybe what is really the Finternet, right? Is it a public blockchain network? Is it identity? Is it data sharing? Like, what concrete form do you think you want Finternet to be? How are you thinking about this? Maybe a brief mention of
Yeah. It uses a lot of the components you mentioned, but I think it's broader than that. So when we thought about it, we said, hey, if you had to take a very first principles view of if you were to build a financial system and you had no constraints, what would that look like? And it really can be distilled down to what I call the 3 U's. So the first U is user-centric. And what we said is, could we imagine a world where users, both individuals and businesses, in fact, many times in digital infrastructure, businesses get left out, MSMEs get left out. So how can you design for both individuals and businesses having control over any identity, credential, and asset that they have, right? So assets could be regulated assets like different forms of money, central bank money, commercial bank deposits, stable coins, securities, listed securities. It could be registered assets like a physical property that you have, or vehicles anything that has a registrar behind it. It could be a tested assets, energy resources, gold, silver, or even user controlled like digital assets. And so individuals and businesses, all of us have assets that cut across this spectrum. But it's really difficult to transact. It's really difficult for us to manage these assets. And so we said, okay, step one is, could we imagine a world where you have control over your assets? And not just your assets, but also identity and credentials that get attached to these assets over a period of time. So that was one. The reason that's also important is many a times today, if you think about it, let's say we go back maybe 15 years, 20 years, right? And you gave me a dollar bill. So you had a green dollar bill and you wanted to give it to me. You could have, and let's say you also had an equity share, right? You could have just handed this over. You could have handed me a physical equity share and I could have handed back a dollar bill to you and we could have done this transaction at midnight anywhere in the world. Now, try doing that in digitized systems and they'll say, no, you can't do this at midnight, the markets are closed, right? No, you can't do it in this location, so on and so forth. So what happened? So if you think about it, actually in the physical world, you had these tokens, these notes, these papers that were representations of different forms of economic value, physical property documents as well. And in fact, embedded in them, you had all the verification marks, all the symbols that were required to tell you what is a token about, what is its value, how do you verify it, etc. And what that did is, it was very freeing because now you and I could individually transact, individually verify, individually settle it, without any other complex system getting involved. However, when we digitized these assets, now imagine that same transaction. So now when you digitized that equity share, the asset sat on some ledger, which was some database system. The verification logic sat somewhere else. The validation logic sat somewhere else. And then my money sat on a different ledger, different system. And now imagine that same transaction. No longer was it about you and I transacting. It was also whether those systems were integrated with each other. And that's a complex API integrations, bilateral connects, etc., which actually for, I would say, higher value transactions has worked. If you think of card networks, SWIFT, very purpose specific networks have been built out across the world. But moment you think about a broader set of transactions, whether they're low value, but you start thinking about higher volume, then the infrastructure starts to break down, right? And so that's where it became important to look at the newer cryptographic developments that were taking place. And so I think the work that's happening on public chains, which allows you to imagine global state of an asset, the work that's happening on digital signatures that allows you to natively verify any document or any credential without ever having to go back to the source system. So a lot of the cryptographic developments that are taking place over the last few years, some in decades in the making, but accelerated in the last few years, is sort of back to the future. So allows you to imagine that same paradigm where you had control over your assets, but of course in a digital manner. So you could transact across borders, across sectors, 24/7, fractionalize. You can't tear up a piece of paper into 10 parts. You can do that digitally. So really the Finternet is about leveraging a lot of those technologies that are now coming up to give that control back, to do that in a unified manner, right? So remember, we started off with the 3 U's. So user-centric. Second is unified, because how do you allow for each asset to have its own regulations, its own governance norms, as the case may be, its own rules, but yet unified for the end user, because that's what matters. Users should have the ability to transact. And then the third idea was, can we do this on the back of universal infrastructure? Because what we realized was, because of the financial infrastructure being so purpose specific, it's really difficult to roll out different types of use cases, right? And think of it like developing an app pre-smartphones. What would you do? App developers would go to like a telecom company. You'd be dependent on their stack, their technology, and then you'd build an app and your distribution would largely be located to just the region of operations of that telco. But then smartphones came in, they created a global abstraction, which were, using the operating systems, iOS and Android. And now anyone could develop an app and anyone could distribute that. And that's extremely powerful, right? And so what we felt is much like what happened in early days of the internet, where you had private protocols and systems that then gave the way to TCP/IP and packet infrastructure and the like. And you had control over the flows. So public internet, all of us transact on that, but you can control the flows. You look at what smartphones did. They created this universal programmable playground. We felt a lot of the cryptographic developments allow us to imagine a world where the underlying financial infrastructure is universal, open to anyone to plug in, build, contribute, but you can regulate the flows. So obviously if money is flowing, then depending on who are the issues, what are the counterparties, you can regulate that. In some assets, they're not regulated. Let's say you are selling me a bike, that's a completely peer-to-peer transaction between the two of us. So depending on the type of asset, you can have controls on the flows, but the underlying infrastructure is universal, and that's key. That's key in both advanced economies. That's important also there are about 100 countries less than 10 million in population. So they can't keep rebuilding infrastructure from scratch, which have been the attempts so far. But they still should have sovereignty and autonomy over many critical financial flows. So that separation of control, yet leveraging common infra, was very powerful. So that's really what drove the Finternet, which is how do you think about a user-centric approach that unifies across diverse asset classes and builds on the back of highly universal infrastructure. And so I think a lot of work on public chains, digital signatures, proofing systems, a lot of that is pointing towards a similar imagination, and that's what excited us.
Okay. No, I think that's a very good way to very good analogy to think about the transformation from, let's say, like paper tokens to digital and now back, right?
Yeah, it's really back to the future. I mean, if you really think about it, you had that system, you were in control, you could transact.
Yeah.
Sure, if I had to transact across borders, then I had to post it to you. I didn't have the benefits of digital, but there's a powerful mental model out there.
Yeah, no. I think that analogy, is relevant because essentially you have certain behavior like verifiability, let's say with paper token and such, but it's not scalable. So
exactly.
Now then you go to digital, which makes it more scalable.
Exactly.
But then you kind of come up with newer constraints, based
exactly.
on this. Now you are trying to mitigate those constraints in using, let's say public blockchain technology or proofing systems or
correct.
Things like that.
And that is an important point. I mean, basically the two properties we are after with the Finternet is unlocking verifiability and unlocking transactability of these assets at scale, right? And verifiability essentially means the ability to verify, to check on provenance behind an identity, credential, or asset. But transactability is particularly interesting because when we were thinking about this, we felt there are two types of transactability properties. One is when you think of it in a financial context, me doing a financial transfer to you, like paying money, purchasing equity, etc. But there are so many other types of transactions like selling a property. So the transfer of property rights to you, or renting a property, which is also again a transfer of usage property rights, is also a transaction. And you also need verifiability behind that transaction. You need appropriate authorization flows behind that transaction. And once you do that, that changes the state of the property, which also needs to be reflected and known to the key stakeholders and participants. And today, that's, again, a broken process. And it also limits, let's say I've rented it to you. Now, can I take that rental agreement and get that financed? And because of universal infrastructure, then you have provenance, the lender can verify it, the lender can then participate. In many cases today, the lender wants original documents, right? So really what we're after is unlocking verifiability and transactability of these credentials and assets.
Yeah, no, I think that makes sense. Essentially, initially, when I came to know of the Finternet and, basically we got talking and we got involved in.
Yeah, I'd be curious. I mean, you've been in this space for a long while, building really cutting edge stuff. So what piqued your interest? And
No, so in general, when I first read, I thought the Finternet white paper I thought this was very close to what we were trying to build with public blockchains in general, right? Like, but there were additional elements as well. In general, but over time, once I've gone through, talk to you guys over time, talk to a lot of people, right? Like, so I think, public blockchain technology is pretty, of course, state of the art in ledger technology and stuff like that. But it's only one part of the puzzle, right?
Yeah.
Like, I mean, it's basically like what you're mentioning, right? Like, I mean, it's like about verifiability, about provenance, about trust, really. And so there's also other elements of the stack that come together to kind of, create this. Ultimately, it's down to, what I've realized is that we've spent a lot of time building in the crypto space, in the public blockchain space, a lot of ledgering infra. And we've tried to build a lot of the other off-chain verifiability bits, but we are not as far along on that path as we are with, just the ledger rails, like public blockchain, like transaction rails.
Yeah.
Like, we have like very good programmable transaction rails, but a lot of the real world interfacing infra, really, which is basically, like things like provenance, proving, for example, verifiability. So that is still left. And so what piqued my interest in Finternet is essentially, we even people in the public blockchain space have to kind of move outwards in terms of in this direction, right? Like, how do we kind of incorporate real world provenance proving on public blockchains? Because right now, bulk of the activity on public blockchains is dealing with crypto native assets.
Yeah.
Not really like as we call real world assets, right?
Yeah.
Like, I mean, essentially these are so we have to make that bridge between real world assets and the ledger on crypto. And so that is part of like, as you asked, with the Finternet, I thought that it would be a very good opportunity to kind of merge both of these. That's like where I was my primary interest.
Yeah, no, that resonates a lot with how we were imagining it, because what we've seen is there are certain things that you have to start to think about when you expect these systems to be working at population scale, right? And governance and trust becomes particularly important, where very quickly that moves beyond just a question of technology towards broader arrangements, contractual arrangements, legal frameworks, what happens when things go wrong. And a lot of that today cannot be just baked into the technology. Maybe 20, 30 years from now, as the world becomes a lot more computationally represented, then more and more of it can be baked in. But even if you see today, when things go wrong, even in the crypto public blockchain world, you finally end up, running to the court system, right? I mean, you don't say resolve it through smart contracts. So you do need to think about how it starts interfacing with the existing institutional structures, some of which also start to make sense when you see that what works for 1 million people is very different than what works for 1 billion people is very different than what works for 8 billion, right? And so a lot of our thinking came from that vantage point, saying scaling what works is very different from what works at scale. So can we think about what are the primitives that are critical if we imagine this infrastructure to work at scale? Public blockchains, obviously, in that imagination played a very critical part, because at scale, again, the property of global state of an asset, transactability, programmability, all of those are very powerful. But if you can supplement that with, the right kinds of mental models on fraud, the right kinds of mental models on how do you think about different types of risks, and bring in other stakeholders that are part of the ecosystem, registrars, what we call in the Finternet token managers, which could be banks and other participating entities, then it starts to provide a lot more legs. And I think it's also about bridging where the world is today with where we want it to be, right? Because otherwise, a lot of this will evolve over the next 10 years, but we can't wait for 10 years where, everyone is ready, everyone is tokenized, everyone has digitally native assets that they are creating. So how do you sort of traverse this where you can solve for where the world and society is today, but with simple plus ones, start to evolve in the direction where we want it to be while getting adoption at each phase. And so a lot of the thinking in the Finternet was about some of these models. How do you bridge? How do you coexist with existing infrastructure? What parts of the transactions you can leverage these rails for? What parts of the transaction you could use existing rails that might be efficient in certain markets in certain countries? Just to save time, to save adoption time, and what sort of infrastructure, like especially when you think about fraud. Again, fraud, you are going to rely on existing AI systems that often have to be done off-chain. Again, you can't solve for fraud on-chain using smart contracts, just given how computationally intensive many of these models are. And so some of that stuff, again, is pretty obvious. And we felt that if we could create an architecture that brings that in, then that could allow us to think about deploying some of this infrastructure at scale much faster and accelerate that transition, that timeline. Yeah.
Okay, makes sense. Okay, so now in general, let me ask you, right? Like, how are you thinking about like the go-to market in general? Like, who are like the Finternet essentially is more like a public goods initiative, if I'm not wrong, right? Like, so how are you thinking about this? Like, what sort of companies are you or projects are you kind of trying to attract? How do you think traction will proceed, right? Like, is it with smaller companies, startups, mid-size customers, large banks? Like, how are you thinking about this? Or in general, the traction problem, right? Like, I mean, I think we were discussing offline before about going with crypto up, for example, and things like that. So just a broad idea of how you're thinking about GTM.
Couple of, I think, since we published the paper last year, we spent a lot of time with policymakers and market players and tech companies across the world. And just given the positive reception to the Finternet, and a lot of these ground up communities were starting to be formed in different parts of the world, we felt, okay, a good next step would be to create an early organizational structure around it. And that's how we've started the Finternet Labs initiative. We've set up one in the US. We'll soon have one in Singapore. I'm moving to Singapore in June. And we'll have one in Switzerland, and we have one in India as well. And so the idea with the lab network is to exactly pilot many of the points you brought up with different types of entities, different types of organizations, and pilot not just the tech, but also different operating models or early adoption models. And we'll likely spend the next year in that phase. So while this is a broader, I would say, 10, 15-year journey for us, at this point in time, the next year is really going to be about learning a lot more of these thorny questions. And I think there are a couple of directions that I see emerging. I think one is very clearly the tech is maturing, because some of the thesis we've written in the Finternet paper also includes extensions to existing public blockchain system, right? So the idea that the transaction should be private by default. So you leverage public chains, but it should be private by default. Some of the ideas around interoperability. So some of these constructs, what I've been seeing, and there have been a lot of members of the community as well that have been benchmarking and prototyping a lot of the technology thesis behind the Finternet. So I think largely the technology exists, and in some cases is maturing. So the next 1 to 2 years will exist, especially when it comes to data sharing, and some of that stuff I think is still a bit nascent, private preserving data sharing, but a lot of the other tech really exists. So the question is more right now, I think we're emerging out from a world where it was a technology problem over the last few years, where scale was a tech problem, thinking about privacy on public chains was a tech problem. Some of these constructs are basically solved for. And so the answer is really, how does it get adopted? How does it get packaged? How will consumers interact with the system? How will it get adopted? Which sectors and so on? And so there we are basically running a few tracks. There are tracks on the capital market side with different financial institutions. And I think capital market players have a natural incentive towards this kind of infrastructure because of the use cases it can unlock in private markets, the use cases it can unlock across jurisdictions. So that's one. The other angle to it is work we're doing, particularly when you imagine different types of assets like physical property. So how would, if I had to tokenize that, what would it work? That I think will be on a longer continuum. So these are early experiments, early pilots where I could tokenize a property, get a loan against it. But given just the diversity of regulation surrounding physical property, I think that's going to happen on a much more longer basis, because one of the things that are key, especially for many of these tokenization efforts, is, and you mentioned it in the early part of this session, is how does it get bound with the real world asset, right? And there it actually has to tie into existing contractual and legal frameworks. And in some jurisdictions that may already exist, in some cases that has to be enhanced more explicitly. And so I feel that binding between the physical assets and their tokenized representations, whenever that happens, we'll start to see larger markets being unlocked. So some of the early experiments we're doing in property and those kinds of assets, securities, is to just accelerate the knowledge so that that binding can be accelerated. But in terms of real world adoption, I think that's a bit further along. I think some of the work as well on the payment side, particularly around stablecoins, is quite interesting. And so there what we're looking at is, one of the theses in our paper has been, how do you have layered proofing? So the idea that I can, depending on the risk of a transaction, and risk may be determined by like transaction size, transaction value, I can layer on my KYC requirements. And so how can I take in real world credentials, layer that on depending on different transaction sizes, and then transact with anyone within the network? And the anyone could also be across different borders, because you've got, again, many countries that can't implement this infrastructure from scratch. So we are seeing some pilots on a physical property side, some pilots on energy and energy resources. So the whole category of user-controlled / attested assets. Some pilots from a monetary perspective, some from a capital markets perspective. And so the real idea is to just test out different, in addition to the technologies, our real interest is to think about what are those operating models, what are those incentive models, how will consumers experience this, how will interoperability work. So we're trying to test out a lot of those theses within our pilot, and then we'll just take it as it goes. Every 3 months, I think the learnings are quite rapid and evolving. So that's really how we are looking at it at this point in time.
Okay, makes sense. I think from the perspective of, let's say, young founders wanting to work with the Finternet, right? What are the problem areas that they should be thinking of, right? See, if you kind of look at today, if there's a young founder, a young developer who wants to enter something, right? Mostly at the moment, they will look into doing some work with LLMs, AI models, for example, because there's a certain kind of archetype that is looking after all this, right? So in the same sense, right, what advice or what ideas would you point a young founder or a young developer or a young business person, coming to the Finternet to be looking at?
Yeah, I feel, this space is extremely exciting, and I think it's really what's going to shape, it's already shaping, and it's what's going to shape the future economic system over the next decade, 2 decades, right? And I think we've not even touched upon many use cases where a lot of what we've discussed so far is imagining existing flows and them being tokenized, right? But really, if you stretch your imagination and you think about the internet, you think about AI, and that converging into the fact that you now have this economic fabric where you've unlocked verifiability and transactability of any identity credential asset. That's just hugely transforming because you're going to create applications, newer types of business models on the internet around how we deal with content, how we transact with content, how we subscribe to content, how we create it, how you monetize it. So there's so many new interesting applications that will come out, which today, just because we're just at the plumbing level, we're spending a lot of our energy there. But if the plumbing existed, I think a lot of the newer founders can start to imagine use cases on that side of the world. I mean, what we've seen on prediction markets is also interesting. Very early days, but quite likely, 10 years from now, many people would make decisions and also test out some of their decisions in prediction markets because it's just so democratic and available to all and so easy to test, right? So I think there's a lot of those interesting use cases that are a bit at the boundary, but if you imagined this plumbing to exist, I think that's an area that a lot of the early founders can come in because that's going to be the next wave of application that gets built up on these kinds of infrastructure. In addition to that, obviously from a Finternet standpoint, and there are a bunch of young founders within the ecosystem, there's a bunch of technical tracks that people can plug into that we're doing. And some of it could also be in terms of the early pilots. So I think these are the two areas that people could participate in. Or they could just join the lab and understand what's happening and then go on to start a company, sort of a entrepreneur in residence program if they're still thinking through their ideas and hypothesis. So either they have technology that solves problems written within the Finternet paper they could plug in. They have use case ideas that they could plug into the pilots, or they could just join the lab effort and learn, and then over the next year to 2 years start a company.
Okay. What are your goals for this year in general, or the next 1 year, for example, right? Where do you want to be? What are some concrete goals that are coming up, towards, let's say, 12-18 month cycle, for example? So there's a two-part question. One, what are your immediate plans, right? And the second is probably, with all the changes that are happening in how, the world is going, how do you anticipate some of the, these things to kind of happen? Is basically the Finternet going to get accelerated because of some of these changes over the, maybe over a 1 or 2 year cycle, for example?
Yeah, I don't spend a lot of time thinking about the macro factors from the standpoint that those are things I can't control, right? And so I'd spend most of my energy on things I can control, which are the areas I can apply direct effort in. But if you look at the broader macro factors, I just got back from the US, there's a lot of discussion being had on the regulatory frameworks around crypto, digital assets, market structure, stable coins. And so I feel that what's going to happen over the next 1 to 2 years, especially as the US formalizes its ecosystem, it's going to drive a lot of other countries to formalize their ecosystems as well. And that's also going to prompt conversations on, okay, it's not just digital assets and stable coins, but also now what happens to other types of tokenized assets. We're not there yet, but I think those regulatory conversations will start to spill there as well over the next 1 to 2 years. And so what that means is we can start to assume that a lot of the legal frameworks and some of these will fall in place over the next, I would say, 3 to 5 years for sure. So that's one very positive development. I think from a lab standpoint, really, my goal over the next year is we're aiming to do a Finternet summit in New York in Jan of next year. And by then, we should have at least 10 pilots up and running across these diverse themes that I touched upon, with both large financial institutions, small fintechs, public chains, and related crypto companies, really testing out different parts of the Finternet thesis. And what I'm starting to see is some of the thinking is coming together, like the discussions we had on saying, hey, from an operating model perspective, maybe you think of a common network that also ties in identity along with the asset transaction flow, along with the entities involved in that flow. And so there are some of these threads that are emerging. And so the idea is to keep space and keep that openness. But very tactically over the next year is to have the labs up and running, to have a team that's recruited full-time into the lab network, and to then actually support 10 pilots across these areas, where the pilots are very specifically testing out the thesis of the primitives of what will work at scale, right? So that's really the area we are focused on. That's the area we care about. So what will work at scale, both from a technology perspective, which is actually a lot of the open source work. There's a bunch of blog posts that have also been published on the Finternet Substack and other areas that people can take a look at on like benchmarking to 1 billion transactions a day. What does that look like? So, and there's a lot more that's going to come out as well. But in addition to the tech, some of those operating models. And so once we have those, a lot of those learnings will then feed into the next iteration, where over next year, we'll start to look at even more real world deployments. But for the next 12 months, I would say is the Finternet Summit in Jan, and by then 10 pilots up and running in jurisdictions across the world.
Okay. I think, like we've come to the end of this session. Like in general, can you kind of, like end with how people can, find you on the internet? Are you on Twitter? Where can they find you?
Yeah, they can reach out on Twitter. Maybe you can just add it's I am Siddharth Sid Shetty. I think that's my Twitter handle. But they can reach out over that. Reach out over email. These are the two primary avenues. Yeah.
And the Finternet website handle is finternetlabs.io.
Finternetlab.io. Yeah.
Yeah. So feel free to kind of visit the website. There's a bunch of information there, and feel free to DM Siddharth.
Yeah, absolutely.
Yeah. Thanks, Siddharth. It was wonderful.
Thank you so much, Anurag. Pleasure. Thanks a lot for taking the time out, and looking forward to just seeing how this ecosystem builds. I mean, you and the broader community have played a big role so far. So just excited, I think, one step at a time, and we're moving in the right direction.
Yep. Thank you.
Thank you.